Well, happy Valentine's Day, folks. Hope everybody's having a great day. Today is Friday, February 14th, and we are back. This is We Talk Money. I'm your host, Chris Dunn. We've got Nikki and Travis. Guys, how is it going, and what is the world up to these days?
Well, we still have markets roaring no matter what happens. People buy the dips no matter inflation, no matter tariffs, no matter the 10-year yield, no matter high valuations. It doesn't matter. People seem to be buying.
There's
even
just
bad,
endless dip buyers.
even bad retail sales today. I think the market was up on that at some point too. So it's like, it doesn't matter at this point. I don't really know what to think.
Yeah, we were just talking before we hit record. There's a lot of smaller cap stonks that have been beat since the 2021 bubble that are making big comebacks. And so I've been spending the last week or two just hunting for squeeze setups, like short squeezes and just accumulation range breakouts. And there's a lot of stuff moving. Crypto's been pretty quiet. We'll talk about meme coins and where those are at. But yeah, there's a lot of gold to be mined right now. And Trav actually revitalized his YouTube channel, Stock Geek TV, and has been adding hundreds, if not thousands of subscribers every day. So congratulations, bud. You want to tell people what you're up to and kind of what the portfolio is doing that you're showing with everybody?
Yeah, it's been awesome. The goal is to just keep the momentum going. But yeah, I think the portfolio, the public portfolio that I'm managing and showing a lot of transparency into on YouTube has been a big part of that. So I funded a 100K portfolio a couple of months back and have been showing some of the positions and getting that portfolio invested. And I'll be tracking the value changes of that over time on the Stock Geek TV YouTube channel. So yeah, I think it's pretty cool. People seem to like it, and hopefully I don't do anything too stupid to screw it up. But the portfolio is actually up about 9.5–10%, even though it's only about 20% invested right now. So it's been performing well. Had a big push this week on a couple of things, some Chinese stocks and things like that did well this week. And so yeah, it's knock on wood, it's headed in the right direction. So yeah. And we've had some huge earnings movers this week just across the board. So not just in the portfolio, but outside the portfolio. It's been a wild week for people that are out there investing and trading stocks because the moves have been absolutely massive. Like even in big cap stocks like, Robinhood, Upstart, we've had like just huge moves. AppLovin, right? There's just like crazy moves in some of these stocks this week and really just this whole earnings season. So it's been fun, and we just keep hunting for more opportunities.
Yeah, you actually called it on Coinbase. You were saying that Wall Street was really missing the boat and that they were under appreciating what Coinbase was doing behind the scenes. Did that live up to your expectations? How did that play out?
Really interesting stock reaction because the earnings were an absolute blowout, as I predicted. And so they delivered basically twice the level of earnings per share than the analyst consensus estimate going into earnings. It was wild. Like analysts had I think a $2 or just north of $2 earnings estimate for the fourth quarter for Coinbase, and Coinbase did like $4 and north of $4.50 a share in earnings per share. So it was a blowout. Revenues were up over 100% year over year. They had really positive things to say about all the things that they're developing and about the first quarter volumes and about 2025 in general. And yet the stock is down like 6% today so far. So really strange to see that price action. It did ramp a little bit into the report yesterday, but it was a very stark, different reaction than what we saw in Robinhood, which reported a lot of the same, similar types of growth rates. Robinhood had a huge growth rate I think it was like a 300% growth rate in its crypto revenues for the fourth quarter. And, they've been adding a bunch of stuff to their platform as well. Things like, crypto, but also things like betting markets and stuff. So both of these companies are really trying to build platforms for the future for investors across different asset classes. And they're both doing phenomenally well at the moment. But Robinhood stock gapped up, what was it? I think 15 or 20% off the report. And it's been up a lot already this year. And then Coinbase is down today. So it was a little bit of a disappointing reaction. I think some of that has to do with just kind of lukewarm sentiment in crypto in general. And then also perhaps people perhaps they expected an even bigger beat from Coinbase. Hard to say, but I think one of the difficulties is figuring out, what are volumes going to look like in crypto for the rest of the year, because it is a cyclical business, and so they're being a lot more discerning with Coinbase about that, than they are Robinhood at the moment. But I do think this could be a real opportunity for Coinbase investors, because I do think as these analyst estimates get raised, and we've already seen 5 or 6 analysts raising their estimates for Coinbase so far this morning, I think as a lot of that data starts to flow through, we'll hopefully see a recovery in the stock, and the stock can hit new highs later this year. So yeah.
Yeah, great job on that one. I think that, to speak to like what the crypto sentiment is right now, you've got Bitcoin, which I've always said is like in an asset class of its own, right? A lot of people like to lump it in with Ethereum or Solana or whatever. Like Bitcoin is quite different. And then I put, all the L1 competitors, ETH, Solana, etc., in kind of their own capital bucket or their own category. And then we've got meme coins, which have been outperforming, for really like Q4 of last year, and then maybe, January of 2025. But most recently, what's happened is we've seen a deep pullback, just over, really since it started in late December. But as of today, meme coins are actually down on average about 40 to 50%. So there was euphoria going into the end of the year. And I was like, guys, this kind of feels like 2021 again. It wasn't quite as euphoric as like, the NFT craze, at least from my anecdotal, experiences, seeing like teenagers just bragging about getting rich. And we had some of that. But what happened is you had like some really hard hits to the meme space, the Haktua scam, rug pulling. And then you had Trump, do his pump and dump right before the inauguration. And so I think that just really cooled off the FOMO that people were feeling. And so when that happens and things start to rug pull quicker and quicker, the bull market pops just aren't as sustainable, right? Because you get less dumb money chasing and driving those prices higher. And so that's why I think these are down. But again, if we look at Bitcoin as kind of the Mac Daddy, you can see that it's been holding up quite nicely. So we've been dead flat in this consolidation range with 100K as the price magnet, and we've just been over under it. But one thing I've noticed is every time we've gotten a sell-off below that key 90K zone, buyers are just hammering the ask. They just step back in and bid this thing up. So as of today, going into the weekend, we're seeing a little bit of a pop, but Bitcoin's actually been extremely tight, like a really, really tight range for the past week or 10 days, right around that 95K zone. And so this is one of those moments where we're kind of at a coin flip, where we're either going to break the all-time high or we're going to go down to 75K and close the big gap that we have open here on the CME futures. So that's the bear case, is a 75K kind of gap close, or the bull case is 108K all-time high break. And what I keep looking at is, for a guide, is looking at the NASDAQ, which actually right now going into the weekend, we're starting to get a run maybe to test all-time highs. I don't know if we'll make it that far by the end of close today. We've only got a few hours left. And then we've actually got stock market close on Monday. But Trav, I wanted to ask you, like, whenever there is like a Monday holiday, have you noticed a theme of like, do stocks typically run into the close prior to a holiday, or is it kind of a mixed bag or just kind of random? And do you have any thesis on that?
Yeah, there's some good data studies on that actually, but yeah, the 3-day weekends tend to have like a pretty weak return in the last like hour of the trading day on Friday, which makes sense. Like a lot of traders don't want to hold stuff into a 3-day weekend. There's the potential for, negative news. And so, yeah, that's what we've seen. But, it's like statistically, it's like 55-45. So, it's still almost a coin flip, even though it favors, not having exposure into the weekend if you're a short-term trader. So it can kind of do anything on a single single event basis, but generally, yeah, you see a little bit weaker performance in the last 1 to 2 hours of the trading day heading into a 3-day weekend, which I think makes sense because, again, a lot of traders don't want to hold into a potentially longer period that could have negative news events. So, I haven't looked at that data though, in, markets that are basically trending like we are now versus markets that are, say in bear markets or choppy. So it could be that in bull markets, the numbers look a little better. I'm not sure.
Gotcha.
But yeah, I think it's interesting to see the strength that we're seeing right now, given all of the kind of mixed economic data and a lot of still the uncertainty around the political situation. Like this market, like Nick said earlier, is basically like the honey badger. It just does not stop. It's wild, and I think eventually that's gonna, it's gonna lead to a nasty shakeout. But I mean, who knows? Who knows when that comes?
Yeah, let's talk more about the macro picture. There was some big news this week with inflation and jobless claims and unemployment is still low, and you've got half the country or probably more than half the country that's like really stoked about what the Doge team is doing, slashing spending, and then you've got the Democrats that are really pissed off about it. But yeah, Nikki, maybe you speak to like what did you see this week in the macro side, and were there any shifts, or is it just kind of business as usual, or any landmines to watch out for?
I mean, everybody was talking about inflation, which is probably going to be the thing we're going to need to pay the most attention to, especially if things end up panning out with, you know, the tariffs, and we'll have to see, I guess, what happens with energy prices. Last I had looked at oil, I think we were, let's see, we were yeah, we were down a little bit, but basically we were looking at oil rising at one point. That was going into January, so we were watching that, but that seems to have tamed itself. But I think that retail spending was not great, but that has a lot to do with the fires that happened in California. That's a big economy in California, so that definitely probably affected that. So we'll see if that's a blip on the radar or not, or if the consumer is actually starting to kind of pull back. We're not seeing mortgage rates really come down. We're still seeing yields stay elevated for the most part. So it's like the market isn't really functioning as a lot of people thought it was going to. And there's a lot of mixed bag data out there that it's kind of hard to position. It's hard to say the market is going to continue to go higher or the market is going to pull back. It's like right now, everybody's just got a big question mark over their head. Kind of like, what do we do with this data, and how do we position? So I think it's a little bit of a murky area right now, especially people that have a lot of fresh capital. A lot of people are expecting a sell-off. But then again, it does feel like the animal spirits are feeling pretty bullish too at the same time. So it's just, you can't really make sense of it right now, I think.
Yeah, I mean, anytime I get too confused with opinions or like mixed data, I just look at the charts, right? And the charts, they don't lie, at least most of the time, unless there's manipulation, which definitely happens. But right now, indices are close to all-time highs. We've also got the Russell 2000 that's still holding up. And in my opinion, I think this is going to be, maybe an outperformer this year, where, we've seen the Mag 7 pull back a little bit, and we've seen small caps start to pop. So this is the chart that I'm really, just been dialed into over the past several months, is like, can we get an all-time high breakout in small cap? And if that happens, I think this is going to be a trader's dream market. I just see so many charts that are just primed for moves. Now, obviously, if the NQ pulls back or there's a big shift in the economy and this doesn't actually break like 2,500 on the Russell 2000, yeah, that doesn't have to play out. But I think the odds are that we do get a break, and that we do get some of these like charts that are just squeezing and testing multi-year resistance. I don't know. I'm primed. I'm ready. I've got my options account funded and just like ready to hammer. I had a pretty good trade over the past couple of weeks on CrowdStrike. which has gotten some great follow through here. But yeah, just been building the watch list, and when crypto is slow, a lot of times we have a lot of opportunity in stocks, and then when stocks are slow, sometimes we have a lot of opportunity in crypto. And that's why I tell people in our community, like, even if you're a big crypto person and if you're looking for opportunity to grow wealth when Bitcoin's flat or altcoins are bleeding out, like, there's a lot of opportunity right now.
I do think that we are in a trader's market right now. The charts have been surprised, like even small caps, just I don't want to call them small craps, but companies you would not think are that great. Even their stocks are pumping. And so I think that we're in a trader's market right now. I also think we're in a stock pickers market right now. And that's across the board. Small, mid, large cap, you could probably find something to pick out of all of it, right? And the reason uh, there's a lot of data that you can look at to kind of determine if we are or aren't in a stock pickers market. I think that the concentration of the top 7, the top 10 is leading to a lot of opportunity in the bottom part of the S&P 500. And I also, Trav and I pulled this data. Well, Trav pulled it, but we were talking about it earlier offline, that 35% of the S&P 500 over the past year has outperformed or 35% of S&P 500 stocks have outperformed the overall S&P 500 return. So it's not like outsized returns aren't out there and happening. And I think that there's going to be a lot of trading opportunity if this keeps up the way it is. I also think it's interesting that Bitcoin has the, kind of the relative weakness compared to the S&P 500 right now. And I know you talked about Bitcoin's price action and we're kind of consolidating. We're in a range. And this range bound trading can take a long time to play out in Bitcoin historically. I mean, the last range I think was 7 months, give or take, to play out to get the breakout. So we could be moving into a period where Bitcoin just consolidates for 5 more months for all we know. But it is interesting to see how Bitcoin is so weak compared to the S&P 500 price action.
Yeah, I'll pull this up. So this is a comparison. This is an hourly chart of the Bitcoin CME futures compared to the NASDAQ 100 E-mini futures. And the reason why I do that is so you get like an apples for apples, like kind of time frame, because spot Bitcoin trades 24/7. But if you look, I mean, there's still a lot of correlation here, even though, stocks have been kind of showing a little more relative strength over the last, like, I'd say week or so. There's still not enough data to say that they're like inversely correlated or that like Bitcoin's losing to stocks. I think they're just, my opinion is that Bitcoin is just looking to the stock market as a guide. And if the NQ breaks an all-time high, I think the odds of Bitcoin playing catch up are really high. The other chart that we can look at is you can actually compare Bitcoin to the NASDAQ and see how that's priced. And you can see, yeah, I mean, it's just dead flat since November. We had the big pop on the election and then it's been consolidating. So yeah, what I would really love to see for Bitcoin is like by at least Q2, sometime in Q2, is to see another big leg up on Bitcoin against stocks. But yeah, stocks might actually move first.
But I do think it adds to all the confusion out there right now with where we're heading, what we're doing, the economy, the macro, all of it.
Yeah, and look, that's what Bitcoin likes to do, right? It'll make a big move and then it'll consolidate for months. All the tourists will, get disinterested or bored or go away, and then it'll make another big move and they'll be like, "Oh, crap, I missed it." And then they'll chase, right? So that's why I say, like, you got to stay dialed in. This isn't something that you want to just ignore for weeks or months. Now is the time to pay attention and to, hone your skills and build your watch lists and, get your accounts ready and be prepared to strike when the right opportunity comes along.
Do you guys feel like we're in kind of more of a bull euphoria, or do you think most people are thinking pullback is coming, correction is coming, danger?
An interesting dynamic that we're seeing right now is actually like the fear and greed index is kind of neutral. The AAII sentiment gauge is slightly bearish, actually. So, um, you know, I see the daily moves that we've had in some of these stocks, and they've been massive. And I see, that a lot of stocks are up year to date more than 30% already, and we're coming off of 2 really good years in the stock market. But from the sentiment gauges that we have, we're not seeing that like extreme greed sentiment. And so I
Yeah.
find that pretty interesting. And it certainly, if you look at crypto, obviously, I think the sentiment's even more weak or lukewarm, like I said earlier there. So
Yeah.
surprisingly, I don't think we're actually at a level that really freaks me out sentiment wise.
I
Yeah.
completely agree with that, Trav, especially on the crypto side. Like most people don't know this, but a majority of altcoins are actually in a bear market right now. If you just look at like price structure and you think about like, is price making lower lows and lower highs, and are you below the moving like the 100 period and the 200 period moving average? A lot of these alts are, and so yeah, it's kind of like stocks where Nikki, would you say it was like 30 or 35% of stocks in the S&P were actually outperforming the baseline? So that means it's, the gains are more concentrated. It's definitely that way in crypto as well, where we have just a handful that have actually been outperforming. And, you can see that by looking at the total three or the others chart, where when you exclude large caps, they're still, 40-45% off of all-time highs, where Bitcoin is still, knocking on that all-time high level. So this is definitely not a market where you want to be a shotgun trader. And I've been saying that for 2 years, and that would have saved you a lot of money. So I think
Well,
it's true in stocks and crypto.
normally I feel like I can gauge sentiment pretty well, and I feel like I know how to go forward based off of that, especially those contrarian thoughts I typically have. And I'm literally shooting blanks right now. I can't put my finger on it. Like
And I think that's good.
it's
I mean, I think we're, the fact that stocks are at all-time highs basically, and we don't have euphoric sentiment. That's again why I'm like, I'm thinking that this Russell could really get moving. And if we do break 2,500 on the Russell 2000, and we, let's say we make a run for 3,000, that's where I think we'd see that greed kick in, and that's where I'd be selling breakouts into that level. So that to me just adds more, conviction in the bull thesis here. I don't know, Trav, what do you think, man? You're the stock geek. I'm just throwing my opinion out there, man. But
Yeah, no, I mean, on the macro data side, I was a little bit concerned about the hot CPI print, and we saw yields like go up pretty quickly that day. And then the PPI came in a little bit hotter than expected as well, but then yields actually have sunk the last 2 days. So I was a little bit concerned for the market and what might happen if the market saw multi-month highs in the 10-year yield again. But then we just sort of reversed course. And the interesting weird part about it was that, like, I guess traders got excited that there were some components within the PPI that the Fed really hones in on that were actually a little bit weaker than expected, even though the overall PPI was above expectations. And so they're like, nitpicking parts of the data and assuming that, it's all going to be fine because of that. And so that's why apparently we've seen a reversal in yields. And so, that's pretty good. And that's something that I think we should still keep an eye on is the trajectory of yields, because that's something that's been a thorn in the side of stocks and risk assets when they get too hot. But I mean, honestly, when I look across the landscape of macro data, market data, like it all looks pretty good. We've got, the potential for Chinese stocks to join the party, or really they have been joining the party. And if that continues, that just adds to global liquidity, and you've got potential peace deals on the table in the coming months. And so we're seeing even assets like copper up quite a bit lately. And that suggests the industrial economy is improving. We've got European stocks up even as well. And so it's like, man, when I look out across the landscape, it's like, and I hate to say it, but like things look pretty good.
oh
It's
no.
like famous last words, but
yeah,
it's hard to like nitpick any areas right now that are super scary. Maybe that means I need to put some hedges on, but
You
that's
just
the
need to
reality
read
of what I
more
see.
Robert Kiyosaki and Harry Dent. You just
That's
need
right.
to
Yeah,
read more bear porn.
I need doomer porn. Yeah.
I'm starting to hear more yield fears about, 5% on the 10-year, and just people are fearful that yields are going to continue to go higher, which definitely would be not great.
I mean, that is the big risk, right? Like, so I think maybe we're in agreement that we are more bullish than bearish right now. But yeah, what could happen that would immediately change our thesis, right? Because we're traders. We're not like long-term macroeconomists. Like, we have an opinion today that might be completely different tomorrow or even in an hour. So yeah, what would you guys look for? Would it be, just if yields just started taking off, or, would it be some other kind of tariff? Do you guys have an opinion on the Trump tariffs? If, is it all bark, no bite? Is it actually a threat? Yeah. What is that bear case? And also, like, maybe if there's any other opinions on the tariff stuff.
I do think one bear case that I've heard kind of whispered from a few smart macro people I follow is that the US economy may not perform as well as people are expecting it to. We did get a weaker retail sales number today. The unemployment report showed less jobs added in January than a couple of the previous months. People are, of course, worried about the impact of tariffs on consumer spending and things like that. And so there are some out there who believe that we may have a growth scare in the coming months, and that we may actually be looking at the data, and rather than saying, oh, like growth is hot, inflation's hot, actually the economy may be weakening a bit here. And I don't know if I fully bought into that view, but that is a view that's out there from some smart people that I follow. So that's one thing we'll just have to keep monitoring. But I think in response to that, obviously, then the market would probably get happy about more Fed cuts getting priced back in. So there's so much to try to triangulate as far as, all the data points we have. And Chris, you always say, like, the charts kind of don't lie. And I think that's helping to give us a clear view on what type of market environment we're in right now, which is still very much a bullish one.
Yeah. I also wanted to ask you about China. I know, this has been a very underappreciated part of the market. And also, I mean, for good reasons, a very risky part of the market because of the way that, ownership is set up for American investors. And I know you've had some bets that you've put on in the public portfolio that have actually been playing out pretty well over the past couple of weeks. What is the China thesis? Because with all the tariff talks, I think it kind of freaks people out away from maybe investing in China. But what is the bull case there?
I think DeepSeek actually woke a lot of people up, even though the evidence has been out there that, actually the Chinese have developed a lot of capabilities of where they're on the leading edge. Certainly in the industrial and manufacturing side of things, they've long been very strong, but also, a lot of these technology areas, including AI, including drones, including, military applications, including, EVs, for instance. The Chinese EVs have been taking other markets by storm. So, the Chinese are kind of out there proving that they're as good as anyone when it comes to developing technology. And, they graduate more scientists out of their universities than any other country in the world by far now. And so there's a lot of, I think, to look there and actually admire. Whereas, we've been fed in the Western media for the last several years that the Chinese economy is going to crash because of the property sector and the demographics are terrible and the stocks are uninvestable. The stock market's been down. They're going to continue to be so weak. And I think that narrative that we've been fed is starting to get stale. It's starting to get stale because, you look at not only the technological progress, but you look at the economy now being helped by stimulus. The consumer spending is obviously improving because of some of the stimulus measures there. You've got, I think a lot more positive things that are happening underneath the surface that Western investors aren't really seeing because they're just still anchoring on, years past and what we're reading in financial media. So I think there's a lot to be positive about, even on a micro level. If you look at the stocks, they're paying dividends and buying back stock. And so one of the big arguments against Chinese stocks for US investors for a long time was, you're never going to see any of the capital return to shareholders. Well, they're returning capital to shareholders, including U.S. ones now. So I'm not saying it's not without risk, because there is a deterioration in the U.S.-China relationship that's happened in past years, and there is, that black swan scenario where if things get really bad, maybe Chinese stocks get delisted from American exchanges. So that's still that risk you got to worry about. But I do think there are a lot of positive things happening in China that frankly, Western investors have not been thinking hard enough about and pricing in.
Well said, man. Yeah, I know it's been something that a lot of our viewers have been asking about for years. And I think, up until recently, it's been kind of a risk off, at least the way that I view how you've been like investing in China, but maybe it's like a turnaround play.
Yeah, and a lot of the stocks are up like 30 to 50% in the past, year to date. And then, they actually quietly had an okay year last year as well. So I think, if investors, if those markets continue to perform, and if you get Asian investors starting to get more active in the equity markets there, then what you may see is that momentum feeding on itself. And you may have a lot of these Western investors looking at their portfolios and saying, we don't have any China exposure. Why don't we? Why don't we have China tech exposure? And so then this whole thing can become a self-fulfilling, prophecy in a sense, where you do have a lot of these stocks that could have quite a bit of upside. So that's where I think the risk reward is pretty interesting. But again, not without risk, of course.
So don't sleep on China, but also don't YOLO everything into it, because there's definitely risks.
That's right.
Risk
That's
management, you mean?
I mean, yeah, we took profits on part of the Alibaba calls this week, and so that's something I'll be doing along the way as well, is like locking in gains where I can.
Taking profit, blasphemy. Yeah, man, hell of a run over the past couple of weeks.
Yeah.
Talking about risk management, Nick, I wanted to ask you. I know you've been working with a lot of crypto millionaires lately in your financial planning practice, and like something that you've mentioned, I think, a couple times, is like people trying to think about what they would do in the case of a bear market, or a 30 or 40% market correction. I kind of wanted to kick that around. Like, what are the questions that you've been getting from clients, and maybe like what are the options that people have when they think about the bear case, and they're like, hey, maybe I've made a life-changing amount of money in crypto or stocks or both, and they want to protect the downside. What should somebody in that position be doing right now?
Well, it's pretty phenomenal, the difference between my crypto investors and my stock investors. Most of my clients are going to have a mix of both crypto and stocks, but I have people that are, very heavy crypto, and they don't hedge. They just bear, and they just bear the bear markets. They sit through it. They don't make many moves. Maybe they're dip buying in bear markets, but they have like hearts and guts of steel to be able
True
to sit
diamond
through
hands,
those.
huh?
I'm telling you, it's something. They're not asking about hedging. They're not asking about protecting downside. And that's the difference between them and then the people that are more stock focused or more traditional. I'll call it TradFi focused, whatever you want to call it. They are asking about protecting the downside and timing the market, and should I go to cash? And, just want to note that difference. So, it kind of depends on where you fall on the spectrum, but I do think that a lot of people on the traditional, stock side, sometimes they overdo it and it works against them. They're trying to hedge. They're spending money on hedging. They're trying to get out of the market and get into cash and trying to time it perfectly, and it just doesn't always work out for them. It can be costly in terms of just the costs of hedging. It can be costly in terms of the opportunity cost by being in cash. So I think that people need to design portfolios that allow them to kind of sit through the suck and sit through the drawdowns within reason. We're all going to be experiencing drawdowns in our portfolios, even if we're hedging, even if we're, making moves in bear markets. But my favorite thing to do personally is I like harvesting cash, and basically deploying cash during bear markets. So I personally am not as much, hedging with futures or whatever instrument options as much as I am making sure that I have cash available, or I'm harvesting cash from certain places that I can to deploy during those really dark times. So I think that it's important to design the portfolio for your goals so that you can withstand the drawdowns without freaking out. And that's half the battle. And then once you develop the skill, I mean, Trav, you're super skilled, with hedging and all of that. But people overdo it, right? It's like some people just take it too far, and there's a balance to hedging, I think, and protecting downside. You're going to go through a drawdown. Like everybody does, everybody will. It's okay. And I think a lot of the people that and the talking heads that they listen to teach them that it's not.
Yeah, it's like a lot of people try to predict bear markets, and that can cause a lot of like mental errors. So yeah, like you said, and let's talk about like what all the options are. Okay, so in a bull market, you can do one or two or three of these things. You can either take profit into strength. So if you're long, you can sell and get into cash. You can put on a hedge, so you short, and that means if the market falls, if you're short a part of your portfolio, that mutes or reduces the drawdown in the portfolio. Or you could just hold the entire portfolio and then buy on dips. And I think that's something that you guys, I mean, for anybody that's been watching the show for a long time, you guys know that, Nikki and Trav were both buying, the March 2020 COVID panic, the 2018 panic, basically every pullback that we've had in the stock market, that big pullback, you guys have been deploying capital. And I think, Nikki, just from something I've heard you talk about, is like you've actually seen maybe not clients, but prospects or something that have been like, yeah, I sold in the COVID days and I never reinvested, and they've just watched, prices climb higher. I've certainly seen that in crypto as well.
Yes.
So those are like the options, right? And yeah, I agree. People that like over manage their positions or like try to get too cute with it, that ends up costing them more. Trav, what do you think, man?
Yeah, I mean, there's a lot of studies out there that show that like most people just are not great at market timing. And I was talking about on one of my recent videos how like, if you're out of the market and you miss some of the best days in the market, your returns in the long run actually end up being quite poor. And the reason that you would miss some of those best days in the market is they actually tend to cluster around some of the worst days in the market. So yeah, there's just a lot of people end up locking in losses after the market's down and thinking that it's going to get worse, and then they're like essentially selling the bottom and not enjoying the upside participation.
Mm-hmm.
And look, I even sometimes have trouble figuring out when the right time is to take off my hedges after I've added hedges, and the hedges have, helped impact or help reduce an impact of a drawdown. I still sometimes hold my hedges too long because it's difficult to have that mentality after you've gone through a correction and there's all this bad news in the media to then see the positive data and see the prices going back up and being willing to say, okay, we're entering a new market environment again. So yeah, it's difficult. And so that's where I think like most people are just better off, using the drawdown times as a time to actually put in more capital and get these stocks when they're at cheaper prices. And that's typically when, you can end up juicing your portfolio for the future, is in those bad times, putting more capital in and buying more stuff when stuff is down, 30, 40%. So yeah. So we have been huge advocates for, actually rooting for corrections. You'll hear me say it on the show tons of times. Like, I hope the market corrects. I hope, unless you're about to retire, you should be rooting for a huge market correction so that you can put more capital in at cheaper prices. Yeah.
Yeah.
Well said, man. Yep. There's one other option that we've talked about a lot that I did, which is, I have a managed futures account, which is basically, call it a hedge fund kind of, where, they actually trade futures for you, and they typically outperform during drawdown. So like my managed futures account in 2022, when the markets were down, 25%, that was actually up 65%. So that helped on that drawdown, and I didn't have to do anything, like I didn't have to overthink it. And I just got to stay long in my portfolio and then, buy the hell out of the dips, especially in Bitcoin, during the COVID crash and, all the dips that we've seen since then. So, I think this is a really good conversation for a lot of people that, have built like a wealth level where they're like, oh, I don't have to work anymore. Or like, I've gone from like aggressive accumulation mode to more like protection mode. And the last thing you want to do in protection mode is fuck it up, right? And like give back half of your portfolio or more. And that's where I think, diversification, the bigger your wealth number is, the more diversification matters, because it's like armor. It's like if you have a small net worth number and you're like, look, I'm just being aggressive as hell to try to grow. I understand that, right? But if you have reached a level where you're like, I don't have to work anymore, or like this is truly life-changing money, but you're still 100% concentrated in a single asset, you're just taking on a ton of risk, even if it's Bitcoin. Like for me, I have a comfort level of around 50% of my total net worth in Bitcoin. And for some people, that's really high. For others, they're like, Chris, you're a piker little wimp. You should be at 100%, right? But I just like to sleep at night. And I know what it feels like to go through 70, 80% bear markets. And if 100% of my net worth is in Bitcoin during that kind of drawdown, I can't sleep well at night. So that's why I diversify, right? But like Nikki said, there are a lot of crypto folks out there that are just like, screw it, man. I'm 100% Bitcoin. I don't care if I watch my total net worth go down 70 or 80%.
Can confirm.
So yeah, it's a very personal thing. Yeah.
They don't care. And it's more their values, right? They do not trust the like they would just only function and transact in Bitcoin if they could. If they could. They don't want to have anything to do with the monetary system. And I think that this is a new thing that a lot of advisors aren't used to handling. Like, how do you handle clients that don't want anything to do with USD and want to do everything and own only Bitcoin? It's very new, and it's going to be interesting to see how regulators handle it. But it's truly their value system. So what are you going to do? Tell them no? Tell them that's wrong? I mean, all you can do is try to teach why diversification works, especially at that level, Chris, that you're discussing.
Yeah. I just think of it like, I think the best analogy that I've ever heard is like, concentration is how you get rich, and then diversification is how you stay rich. So, a lot of people, I mean, I've talked to thousands of people over the past decade plus that had very, very little and are now wealthy beyond their imagination. And it's like, they don't want to lose it, right? And concentration is what got them to that point. So it proved to be fruitful, and it could still prove to be fruitful. I mean, I'm still extremely bullish on Bitcoin. However, just like I would never invest my total net worth into one startup, I'm never going to keep 100% of my net worth in one asset or one asset class, because again, it's like armor. It's like, if you take a shot to your chest and you have no diversification and that one asset gets demolished, you're dead, right? And what's rule number one as a trader and an investor is, don't do anything that can permanently take you out of the game. And that's where diversification really matters. So if you're in a go ahead.
And life stage, like life stage is just so important to consider in that case.
Yeah. If you're a 20-year-old who has, 3 roommates and you're just hustling and grinding, hell yeah, swing for the fences. But if you're 55, 65, and you've got a lot of expenses and people depending on you, those are two totally different things, I think.
But this is why I love the capital bucket strategy, because it's like you can protect 5 years of expenses and have these buckets of different levels of risk for the time period that you're investing for. And that can help a lot of people if they do it that way.
Absolutely. Yeah. Okay, cool. Well, let's see. What are we looking at next week? I know there's more earnings on the docket. We've got Bitcoin that is squeezing extremely tight. I think over the next few days, we're going to see a big move away from this 95K zone. Stock market's closed on Monday. And what else on the economic side are we looking at next week? I don't think it was anything too crazy, right?
Oh, you're muted.
Thanks.
There you go.
Yeah, nothing too critically important. No Fed meetings, no CPI, no unemployment stuff. It's mostly there's a decent amount of stuff from Europe, kind of mid-tier economic releases, as I'd call them. But yeah, nothing groundbreaking. So more earnings, the possibility for things to just kind of continue on the path they're on with companies making big moves off of specific news. Yeah.
And, talking about Europe, I mean, the DAX is up pretty big. I know there's also concentrated gains in Europe. Trav, anything you want to add about what's happening over there?
Yeah, it's been pretty surprising. But you mentioned concentration. That's one reason for the DAX being so strong. I think, SAP and Siemens make up like 30% of the index. And so SAP has been a monster. It's had a huge valuation expansion as people get more excited about them to be a player in SaaS and AI with potentially faster growth. And then you've got the whole AI build out helping companies like Siemens. So yeah, it's an interesting part of the story. The German economy is not doing so hot, but you do have some bright spots there in European stocks. But I don't know if I fully buy into this rally in Europe yet.
Yeah, I'm with you on that. Cool. Okay, so a little bit of a slower week next week, but again, I'm expecting fireworks and price action with NQ approaching all-time highs and Bitcoin squeezing as tight as it is. So who knows? By the time we publish this, there's probably going to be some big thing that happens or a big move. So if you don't want to miss the big moves and you want to invest in real time with us, check out the wealth building community over at the Wealth Incubator. By the way, we had a brand rename. We were Skill Incubator, but Wealth Incubator is much more congruent with our overall theme of helping people build life-changing wealth. So that's why we made that change. So go to wealthincubator.com or go to wetalkmoney.com/community to check out the community and get into the Discord and our live classes and see our watch list and alerts and all that good stuff. So guys, any final words of wisdom or anything you want to mention before we wrap up for the week?
Hey, go make sure you get your significant other some flowers,
Oh,
Don't forget,
Trav, I didn't get any flowers from you, man. I'm lonely over here.
Don't forget to romance, wine and dine, whatever it is.
Yeah. Happy
Yours
Valentine's
are on the way, Chris.
Day.
Thanks, buddy. I'm looking forward to my chocolates. All
Don't
right, guys.
forget, it's love day for everybody, for lovers, for friends, family. Just show love.
There we go.
Today.
I like that.
Yeah.
All right, guys. Well, I love all of our subscribers and listeners and community members. So I hope you guys have a great weekend, and we will see you next time. Take care.
Cheers.